Welcome back to the Brent Bruce Daily, where each day we take a look and see where home loan interest rates really are, what is making them move, and what to expect for the future. Today is March the 23rd, 2023. It is now 4:27 p.m. The markets are closed. The bond market is closed. So we are going to see where mortgage-backed securities closed for the day after the big news that we heard yesterday from Jerome Powell and the Federal Reserve that they did increase the federal funds rate by another 0.25%. Bringing the federal funds rate to 5.0 and the overall prime rate to 8.0%. Now, I mentioned yesterday that the prime rate affects a lot of credit cards, auto loans, and definitely home equity lines of credit. But both the federal funds rate and the prime rate do not directly affect mortgage interest rates. In fact, mortgage rates went down after the Federal Reserve increased the federal funds rate. That is because the federal funds rate is being increased to bring down inflation. Inflation comes down, more home loan interest rates come down as well. So let's take a look here and see where the markets are today, the day after the Federal Reserve increased the federal funds rate, and where home loan interest rates are as well. So we see here that we are now up 14 basis points on the mortgage-backed security. We're down 3 on the 10-year Treasury. But how are we doing as far as our technical indicators, our floors, and our moving averages? Now, you all know, if you are watching this show often, and you should be, that up here, when we were trying to break through the 200-day moving average on this day, either this day or this day, I was able to offer a 5.875% 30-year fixed conventional home loan with no points to a very well-qualified conventional home buyer. Once that occurred and we were celebrating on that day, we got a very strange employment number that we still don't agree with that pushed us down. Now, when this goes down, we know that home loan interest rates go up. So from this point to about this point, interest rates went up by a full percent from 5.875 to 6.875, and we've been clawing our way back. Look at all the mess we've been getting through, and guess what we did today? We broke above the 200-day moving average for a moment, and we're pushed back down. Again, the 200-day moving average is a very difficult indicator that we need to get through. It's a very difficult ceiling that we need to get through. Let's take a look and see the 10-year Treasury, because it has also been battling with its 200-day moving average. Now, when we look at the 10-year Treasury, this is a yield chart, not a price chart. So we want to see this go down. And you can see that it's broken through all these floors. And now it is convincingly below its 200-day moving average. Now, if we can get the mortgage-backed security over its 200-day moving average, I think we are really in a good position to begin to progress towards the numbers that we talked about back in January. The predictions or projections that we would be at that we would be at that 4.875% 30-year fixed conventional home loan with no points with the Brent Bruce Daily with my company by July the 1st of 2023. I still think that's possible. The first quarter hasn't been as helpful as I hoped that it would be, with some strange numbers coming out from some of the reports. But I think that sets us up for an amazing second quarter. We could see a lot of activity and downward pressure on home loan interest rates here in the second quarter and even going into the third. So where are home loan interest rates right now as we inch towards the end of the first quarter? Well, let's take a look and see here. Looks like we logged out of this. We're going to pull up our loan sifter, which pulls up all the different banks that I work with on a daily basis as a mortgage broker, not a mortgage banker. We work with many banks at the same time. So let's go ahead and pull up this scenario. And while I'm doing this, make sure that you take a minute, because it's always helpful. I think it brings home loan interest rates down. I'm not sure, but I think it brings home loan interest rates down when you do click the like button on my page there and make sure that you subscribe to the channel. So let's go ahead and pull up the scenario here for the Brent Bruce Daily, the very well qualified 30-year fixed conventional, 800 FICO score, 25% down, primary residence, single family residence. We are at 6.375 with a little bit of a credit, $688. Now let's open this up, because as you know, it's not really the 0-point loan that's been so effective. It's the small amount of buy down. So in this case here, 11 mortgages offering a 5.99 for just over a half of a point. Okay, not that impressive. I'm not that impressed with that after getting the report that we received yesterday from the Federal Reserve, increasing by a quarter. But let's open up United Wholesale. Take a look at this. I mean, for almost nothing, $133, you're getting a 6.25. For $600, you're getting a 6.125. For $800, you're getting a 5.99. That is less than a quarter of a point. Guys, I want everyone to kind of listen to that, because for less than a quarter of a point, you can get to 5.999 right now. That is a long way from where we were last month, in the month of February, where we were trying to deal with 6.875%. It's a lot of reduction in interest rate. Now, here's the other thing. One of the hottest items out there right now is a 2-1 buy down. It's being used probably too much, but it's being used a lot. That means that if your customer will pay less than a quarter of a point and your seller is willing to accommodate and pay for a 2-1 buy down, we're doing a 3.99% effective payment rate, not interest rate. If your lender is telling you that the interest rate is 3.99, they don't know what they're doing. So 3.99 effective payment rate the first year. The second year is 4.99 effective payment rate. And then the third year, they'd go to that 5.99. And we know that our goal is that, hopefully we will be able to refinance that client into either somewhere in the 4s or lower 5s before those 2 years pass. But it just goes to show that we can start talking about some very effective structuring situations for some of our buyers that are having a hard time with today's monthly payments and interest rates. Make sure that you reach out to me so that I can put together some numbers for you and your clients. Thanks again. Make sure that you like, subscribe, and share, and I will get back to you again. Hopefully, we will continue to move towards the low 5s now that we're starting to see the 5s come back into focus. We'll talk to you again soon. Have a good day.